Hi everyone and welcome back to another live trading series. I'm wearing the same shirt as my previous video because it's the same day, but I'm splitting them into two videos because they're two completely different subjects. I've been getting a lot of questions on what do I do around Tesla earnings, around Apple and AMD earnings, and what should other people do. I told someone about like some earnings play, IV crush, and how the IV and the premium for options you sold goes down after earnings. They didn't really understand, so I kind of want to show you exactly what I did and what happened. If we take a look at Tesla, Tesla has gone down. So they missed earnings, minus 22 cents. Fine. Look at what happened at Tesla. So it was around, let's say like 890, ended up tanking. Go away. So it ended up decreasing. Let's say we're down 2.86% right now. So when you sell a put and the stock decreases, obviously your put should go up in value because it's more likely to hit that strike. But take a look at what happened to mine. My put has made me money. I sold this last week for $590. It's worth $41 right now. So I'm going to close it out. I'm going to close it out and roll it out another week. But if you want to know, how do I know what happened? Like what was it worth yesterday? Because earnings was yesterday. What is this IV crush? So I am going to show you. It might take a while for all the strikes to load because everything has been slow, especially for all of Tesla's strikes. Just give me a second. Okay, there we go. That took forever. So I do want to show you my exact strike on Tesla, and I'll show you the change from yesterday to today. So because there's big anticipation, volatility around earnings is always high, and it always tanks the day after. This is taking forever. I'm sorry, guys. So take a look here. This is the exact option I sold. Right now it's worth around $41. Look at the change from yesterday to today. $362 difference. So this was worth around $400 total yesterday. But after earnings came out, even though it moved against me, like when you sell a put, you kind of want the stock to increase. It can decrease a little and still be fine. So right now it's down 3%, $26, and I'm still making money because, you know, there's always a uncertainty and confusion. Market doesn't like that. Everyone, predicts big movements around earnings. They missed their target. The share still went down and I'm still making money. So this is why if you sell a far out of the money put around earnings, even if the stock goes down, even if it goes against you, you can still be profitable. So I am going to close this out. So what you have to do is you buy back the exact put you sold, add a put, and I'm going to roll it for a new one. So let's find the 730. Okay, everything is frozen right now. Sorry, guys. Everything is kind of frozen right now. Let me just do this again. So I'm buying back the exact one and I'm selling another week out. I like selling weeklies on Tesla because the volatility is too much and I am kind of afraid. So I'm going to roll this out 1 week, 730 strike. I am buying it back for around, let's say $40, and I'm selling for 1 week around $330. Let me try to get a little more. Maybe I can get some more credit out of this. So buy to close, I'm closing my initial one. I'm rolling it out. No, not much change in buying power because it's the same position, just a 730 strike. Again, don't sell puts on something if you don't want to get assigned at that price. You don't want to hold it. I don't mind holding Tesla at 730, but we'll see what happens. Let me do this. I'm only earning $300, not much. Order filled. There we go. I do want to show you Apple as well. I've been doing a lot of things on Apple. So if you want an update on my poor man's covered call, whoa, it got really dark in here. If you want an update on my poor man's covered call, I am up $1,000 on the leap and I'm kind of down $130 on the call. So this is another one. Don't mind this. Let's see what I want to do. I just want to show you what this was worth yesterday. February 19th, 150 call. So let's find Apple. February 19th, 150 doesn't show. All right, so that was a little slow. Let's see. The 150 yesterday, so it has gone down 196. So let me just do some math. 196 plus 285. So it was worth $481 for one contract yesterday. After earnings, even though it still went down a little bit, 0.5%, I'm still making money on this. I'm not going to roll this out yet. I do want to roll it out to 155, 160. I'm going to try to hold this poor man's covered call. I'm going to try to hold this elite for as long as I can. So right now there's 22 days to expiration. I'm going to let it decay a little more unless it gets closer to my 150 strike. So if before this gets breached, I like to manage it. I don't like managing after because you lose a lot of extrinsic value. So if you guys have a call and you don't want to lose your shares, like I don't want to get exercised, manage it before and move it out further in time. So if you're wondering, right now I'd have to buy this back at 276, but if you're wondering what I can sell it for in the future, roll it out another 30 days. I can choose, shout out to the train. So I can sell another 10 strikes higher. So I can sell for 155 at 385. I can sell at the 160 for around the break even. So if I roll this out another 30 days, I won't be making or losing any money, but I will make another $1,000 indirectly by the strikes moving up. Do I have anything else I want to do? I think that's about it just for this video, just to show you what to do around earnings, how volatility kind of crushes your premium. So it's always good to sell when something has high volatility, just because it'll go, just for the chance it'll go lower. I don't think it's smart to buy options around earnings, because even it goes in your favor, you saw how much it decreased. So even when you sell a put, if it goes against you, you still make money. So if you buy something, because the volatility decreases so much, even if it goes in your favor, it would have to go so much higher for you to make money on that call. So buy calls during low volatility moments, kind of like now, and sell during high volatility. It's kind of why I was doing those BlackBerry and AMD plays. So here it only shows 120. Let me show you what the volatility on BlackBerry is. So for 1 day, this is 1 day to expiration. Look at the implied volatility, 400%. And you just saw Apple at around 30%. So one is riskier than the other. If you want to see something crazy as well, I think AMC is even higher. So if we look at volatility, 700%. So obviously this is risky. You know, things can happen. If you want to make money, sell during high volatility times for a chance to crush. If we just see how this is doing, AMC, I don't care so much about this. What's BlackBerry doing? If you guys saw strategy. So I released a video. I filmed the video like 15 minutes ago. I was down $5,000. Now I'm down $3,600. These high volatility plays do help you make money, but I think the stress and the potential of loss is too high. I don't recommend this if you have trouble sleeping at night. But yeah, those are my two plays. I'm going to roll Apple and AMD next week. I don't really want to do it yet. It is a little early. I'm going to roll them out to the March expiration, and we'll see what happens. I'll keep you guys updated on my BlackBerry and AMD plays. I'm not allowed to buy any GameStop. I'm not allowed to buy GameStop. I'm only able to sell. And like, if I show you, even now, like I'm still not allowed to sell. If I go market, sell, NA, it's not letting me sell. Like if I want to lose my money, it's not letting me, because then I'll be forced to buy. This is kind of frustrating, but you know, the rich are mad. I might release a video on this whole banning of buying and the market manipulation. It is kind of frustrating. Like God forbid billionaires lose some money and the average folk, Main Street, starts to make money. It is kind of frustrating. I will release a video on that pretty soon, maybe just venting. But yeah, that's it for now. Thanks for watching.